Felix here, and welcome to the Bleeding Market pre-market live stream here. I want to spend the next 20 minutes or so with you to prepare you for what's coming, to make sure you really understand what's actually going on there, so you can make better and smarter decisions. And I'll try to share with you everything that I've learned in the last 13 years on the markets and everything that I've learned from my mentors who've been in the markets for many, many decades longer than me. So I've made a little plan here for you, and this one is we're going to go a little deeper perhaps than usual, because I think this is such an important, critical moment where a lot of people are losing a lot of money, money they've worked for many, many years, and they're also missing out on perhaps huge opportunities. I want to make sure you are really prepared here, you really are set up. So what's happening to the market, that's the first thing we got to understand, and I'll show you some data points on that in a moment. And what actually happens if this gets a lot worse? How does the market handle it? How does the stock exchange handle this? We're going to walk you through that. And then what everyone's asking me, do I sell? Do I sell now? Do I buy now? What do I do? When do I sell, right? Well, I'll give you the answer to that, okay? That's point number 3, and I'll put that near the top because it's really important. But if you really want to understand what, in my humble opinion, is driving this, and what a lot of the guys I know in hedge funds and so on are talking about, I'll show you and explain to you what this is really about. Because once you understand what this crash or dip or whatever you want to call it, what's really causing this, and what seems to be the real impetus for Trump to drive this, because at this point that's exactly what that is, and that isn't a political statement, that's just fact, you will look at this in a very, very different light. And then I want to cheer you up, because there are good news. There is good news number 1, there's good news number 2, and there's good news number 3. And number 3 is probably my favorite. It's probably the biggest one. So you want to make sure you catch those and you take notes on those. And then, how do we actually buy stocks on a crash? Do we just willy-nilly buy everything we have? Do we put it all in the market now? Do we buy Tesla, or do we buy the S&P or the QQQ, or what do we actually do? So I want to give you a strategy that I think makes a heck of a lot of sense, and that I think a lot of people, pretty much everybody, and probably Wall Street would agree that that's a good strategy. So I want to give you that as well, to make sure you are insanely well prepared today. So does that make sound good? Does that sound good? If that sounds good, write crash or something like that in the chat. Let's put crash in the chat, because that's kind of the way we're feeling. Pre-market this morning, by the way, is a little bit better, but not a lot. It's not brilliant. It's just not completely house on fire type stuff. So this is a very nice little summary of what's been going on here the last couple of days, last 2 weeks or so. Last 2 weeks it's been getting pretty nasty here. Okay, I'm seeing a lot of crashes here. Brilliant. So what are the I say brilliant, but you know what I mean. So we had a pretty nice rally up till mid-February, right? And then the tariffs were getting a bit louder. And we got that Q1 GDP estimate, which came in really, really nasty, largely because GDP counts imports as a bad thing, which makes kind of no sense, but that's the way the data is collected. Trump then came out a couple of days later and said he's not watching the stock market, and we were all like, what? I thought you were there to bail us out. I thought that's why you got elected. And then 2 days ago, he acknowledges that there may be a recession. He didn't rule it out, and the market went, oh my God. And yesterday, well, we lost $5 trillion in the last 13 days. Not in one go, but yeah, pretty significant sell-off here. Right? It happens very quickly, how momentum changes very, very, very quickly. Now, this is also what's driving us, I think, down yesterday, that the government is actually concerned that there could be a shutdown at the end of this week. And that could again amplify worries, because then, government employees aren't getting paid, and therefore there's less money getting into the market and so on. And it could just be an extra little bit that just scares people and makes them sell just a little bit more, and therefore we go down a bit harder. So that's something to watch out for, what's going on there in Washington. And CNN's lovely Fear and Greed Index is at 15. You know how low that is? That's really, really low. Now, of course, the good old Warren Buffett says, and I'll make this very easy for you, you buy here and you sell over here, right? But in reality, that's one of the hardest things you could actually ever do, because people kind of lack a strategy, they kind of lack a rule book, they kind of lack real reasons to do that. we always think it would be nice when stocks are cheap, right? But then when they do really fall, it doesn't feel cheap, it just feels scary. So people don't buy, people tend to actually do the opposite. Pretty much everybody out there sells over here and buys over here, because that's just how we're programmed. Our psychology is like that. It's a bit weird. I've worked with thousands and thousands of traders over the years, and pretty much everybody is programmed like that. It's the ones that aren't that you want to be worried about, because they're probably going to be, mass murderers or something. So it doesn't feel good to be buying right now, right? You're buying and then it's down another 5%, and then you buy some more and it's down another 5%. It's just horrible. Much nicer to buy stuff as it's going up from a psychology point of view. So I want to give you the strategy that'll fix that for you. And I've recorded a very short masterclass where I put all of that into it. And there's a link down below at felixprehn.com/get-free where you will literally get that rulebook, you get that package. So if you want to really use this as an opportunity to get better as an investor or as a trader, it's pretty much the same thing, then that'll help. Now, you're going to ask me though, thanks for the 109th like there to the Midwest. Appreciate you, my friend. Let's have a look at Tesla as an example. When do we sell? Should we be selling a stock like Tesla? Right? So it's down tremendously. It's down at $222. It was trading at 480. It was heading towards 500. We were thinking at one point. Right now it's at 222. So do you sell at this point? Well, when do you actually sell? So what I teach is sort of the generally accepted best practice that the traders on Wall Street use. The first thing is, well, first of all, you obviously got to figure out, well, when do you buy, right? And we make that pretty easy. In Trade Vision here, we give you a buy signal, a breakout signal. Obviously, got to use that with some strategy, but you can get your access to this for free for like, so there's a week's trial to it. So that was your entry point, right? And then what do? Well, you simply draw up at sort of a trend line, and there's not the perfect trend line in the world, but something like that. When you dip below it, you might want to take some money off the table because you bought at 280 and you're now selling at 420. That's a pretty good run, right? That would be one way of doing it. Another way of doing it, so that would be my strategy number one, would be trend line, okay? One, trend line, trend. And it takes a little bit of practice to learn exactly where to put those. I get that. A little bit easier is number two. You see that yellow line there? That's simply called a 50-day moving average line. In Trade Vision, you can just toggle that on the way I just have, right? You saw that me be doing that down there at the MA there. So this is the 50-day MA, moving average line. I mean, when you go below that, like we did here, generally not a good thing. And that could be, the second point where you sell. So now you would have sold at about $400. Again, not bad, right? If you bought down here at sort of 280, right? That still feels pretty good, right? You made $120. Woohoo! That's pretty good. It's like 40% up or something. Now, what if you didn't? And what if you're still a bag holder? Well, let's put on the 150. Okay, so that's usually where Wall Street says only bad things happen below the 150. And this applies to all stocks, by the way, not just Tesla. It applies to everything. And that's the beautiful thing. That's actually pretty simple. So you got that purple line there, and that would be your real kind of, what the heck are you doing here? Kind of an exit. So that's item number three. This line is the 150-day moving average line. Now, say you didn't know those things, or say you did know them and you ignored them, which actually makes you quite normal. It makes you human. It makes you like everybody else, like fallible. It doesn't mean we can't get better at it, but it's kind of where most people are. So you're still where you're still in it. It's trading at $222. Well, I would sort of look at this as you're below the 200-day moving average line. If you think it's a good stock that you hold, and that's of course something, if you're in plug or something, then maybe this is a different story. How often are we below the 200-day moving average line, say in the last 2 years? Let me just highlight that for you. So it was a little bit there, a little bit here, fair bit actually here, all of that bit here. Tesla is a pretty volatile candidate, as you can see. Here, there, and now here. But can you also see what I've done here is I've pretty much drawn a line across the chart, and if I were to buy below that line, I'd be buying not at the top, right? You're excluding where everybody else buys. Most people buy up here, right? And that's painful. So if you're below the 200-day moving average and you've got a multi-year time horizon, you don't need the money anytime soon, it might just be good to sit on your hands. But that isn't my first go-to strategy, right? That's just sort of a coping mechanism of having missed rule number 1, 2, and 3. Right? Now, maybe you again think this is a little too hard to come up with. Well, with a trend indicator, they give you a sell signal up here. You saw that 421, right? That was a pretty good call, and it's very, very close to the line that I drew in there. Remember that line that I drew in here, right? It's pretty much there. So again, trade vision might be helpful. Get yourself a trial for it. That might be helpful. But that's essentially how I would look at all stocks right now and at all stocks forever after. And once you really internalize that, it makes a heck of a lot more sense. Matt's support isn't working, my friend. It's back. It was out yesterday for a couple of hours, but it's back. It's back. If it isn't on your end, just refresh, maybe clear the cache or something, but it should be back for everybody as well. So who's going to go and learn those rules? Let me know that in the chat down below. But let me first share with you what happens if this gets a lot worse. Right? So the stock market has these rules, they call them circuit breakers, that try to prevent a panic from getting spiraling out of control. So if the benchmark, so the S&P, dropped 7%, before 3:25 p.m., they stop trading for 15 minutes. And then if it drops some more, they also stop trading before 3:25. And otherwise, if it happens after 3:25, you actually need a 20% drop. It's a huge drop, right? But it's actually required here for stocks to have their trading halted. So is that going to be helpful? Probably not, because generally speaking, that actually freaks people out. But I just wanted to make sure you're aware of these rules, because it might happen. I mean, we saw some pretty crazy movements yesterday, right? And Fox there, my friend, thanks very much for putting that link in there. I'll pin it to the chat as well, so it's easier for you guys to access. So you can literally just click on it. I know typing can be a little tedious, but yeah. Who's going to go and actually use this as a kick up the backside and learn the rules? Who's going to actually go and learn and watch the masterclass right now or straight after this? Put MC in the chat, and that way I know that you're actually going to do this. Now, this is why I think the US government is doing what they're doing. Because it would seem that they're doing their utmost to cause as much confusion and anxiety and fear as humanly possible. Ruben, my friend, if you go to the masterclass, yeah, you got to put your email in, but you can watch the video as many times as you like. You don't have to book a call, and it certainly wouldn't be a Skype call, because Skype is going out of business in about a week's time. So the Sean files, I owe taxes, I'm in on margin. This is the worst time. Ouch. Okay. Yeah, we need to de-risk you, my friend. That's the only way. Please don't turn into a gambler here who tries to solve this through gambling and tries to, you know, the stock market isn't going to bail you out of this one. You're going to have to figure out some extra cash flow or some borrowing or something, but you're going to want to get rid of that margin, my friend, because if you're using margin with your tax dollars, and you haven't got the cash from like ready cash flow, that's definitely not a good place to be. Mark there says MC, Sophia says MC. Okay, so you guys are doing that, and a lot of everyone else is just sort of like learning the rules is easy. Following them is much harder, says T-Ray. Yeah, and I agree with you on that. That's why I think you, if you want to get really, really good at this, I think you need a mentor. I think that's really the only way to do it. But let me walk you through something I think is helpful here. So the United States has a lot of debt, right? We know that. In 2025, $9 trillion of that debt, $9 trillion, is due, it's payable. Of course, they're not going to pay it. They haven't got the money. They're going to refinance it. They're going to issue fresh debt, and they're going to use it to pay off the old debt. What's the problem right now? Interest rates are high. So they don't want to pay a high interest rate on that $9 trillion forever after, essentially. And therefore, they're trying to reduce the interest rate. It's kind of as simple as that. So how do you reduce the interest rate? You tank the economy, at least in terms of perception. Because if everyone thinks, oh, it's going to be terrible, then interest rates actually fall, because interest rates are traded in the bond market. And I think that's actually what they're trying to do. I think it's a strategic move to force the hand of the Fed to cut interest rates and to force the bond market lower and therefore make borrowing cheaper. Because on $9 trillion, say you saved 1%, right? What's a percent on $9 trillion? What's a percent times, what does 9 trillion look like? That's 900 billion, that's 9 trillion? Yes, right? It's, no. It's an extra zero there, right? So this is 9 million, 900 million, that's 9 billion, that's 9 trillion, right? So 1% of that is 90 billion a year in interest. 90 billion a year, it's pretty significant. So I think that might be what is actually driving the madness. It's just to save money, because it isn't just one time, right? It's a payment for 20 or 30 years. So what's 90 billion times 10? That's 900 billion. It's that will be for 10 years. It could be 1.8 trillion over, say, 20 years. So it's pretty significant money, right? Ruben, you didn't see the video, my friend. Okay, refresh, maybe try a different browser. Maybe you're using a browser made in 1987, like when Skype was around. I'm just teasing. But yeah, that could be the only explanation, really, because there's definitely a video there, my friend, that tens of thousands of people have seen. So try it in a different browser or on a different device. That should work. So yeah, crazy numbers, right? It's hard to actually wrap your head around that, right? So they could be literally tanking the stock market for a couple of months to save 1.9 trillion over the next 20 years. Kind of bonkers. Makes you kind of think, well, maybe this isn't such a bad idea. This is posted from a hedge fund guy I follow, and he says, if the plan is to let the stock market go and drive bond yields lower to make the trillions in debt that need to be rolled over this year more manageable, it is being executed flawlessly by Trump and Besant. Because interest rates have gone from about 4.8% down now to 4.2%. Big move, right? Bigly move even. So that could be the explanation. Maybe they haven't lost their marbles. Maybe they're simply doing something that's actually quite logical, but they don't want to explain it to you because it'd be pretty boring, right? Trump went out there and said, let me explain to you how the US 10-year Treasury interest rate works. Nobody wants to know that, right? So they're just causing a bit of shock and awe there. So does it provide an opportunity for us to make money? Absolutely, abso-freaking-lutely, but only if you actually know, what do you look for? What do you look for in stocks to buy in these moments? And most people, I think, if they're completely honest, they don't know what to look for, right? If you are not 100% confident and certain you could pick one great stock today, just write that in the chat. By that I mean just put a 2 in the chat, number 2, if you're not 100% certain. Because I think if we're honest with ourselves, most of us are not 100% certain until you have really been instilled with the rulebook properly, right? We're going to get onto inflation just in a second here, my friend. That's actually a good one here. And Jew R and Mark here, let's give them guys a hands up, because I appreciate you honestly, Miguel and Brent as well. A lot of people think, yeah, I know how to do it. But if we're really honest with ourselves, most people really don't, right? Free Thinker, okay, co-partner, Michael, me, Patrick, Twiggy, Claire, okay, Rosie, Mike, loving all the 2s coming in there. The ladies seem a little bit more honest on this one than a lot of the guys, right? Because we've got this built-in cockiness that we need to feel that we know everything, even when we don't. That's one of the biggest problems with retail investors like you and me, is that we don't want to admit when we don't know stuff. We don't want to ask for help. But I know you guys are a smart pack. And I think you will know that the best investors out there, they've had people they learned from, right? The greatest investors out there had mentors. And that's really the only way to actually acquire the knowledge. And I love the fact that you're putting in all the 2s here, because it shows me that you guys are you're the smart ones. You realize when you're lacking something, and therefore you're much closer to actually getting that problem solved. Now, why am I showing you this? Because what you've got here is what this dip's actually doing, dip crash, whatever you want to call it, and what are we seeing is that the red line here is forward PE. So it's basically price over next year's earnings. And that's coming down a lot, right? So we've come down pretty significantly here on that note. So stocks are getting cheaper. But at the same time, and that's, I think, very, very important to understand, is that the blue background there, that one there, the blue, that is earnings per share for next year. So it's the expected earnings. And they're actually going up still. You see that? They're going up. So it's very unusual for a market to crash meaningfully when we expect profits to improve next year, because it doesn't make sense. When profits falter, that's when we're really in trouble. Elazar, I appreciate you, my friend. Ruben, you found the video? Okay, brilliant. That makes me very, very happy. And I'm sorry for teasing you. I do that with people. Okay, let me show you good news number 2. Inflation is over. It's behind us. There is no inflation. This whole inflation fear is just like a hangover from last year. There is the BS inflation number that the US government comes out with. And it makes no sense. And then we have an actual private company that creates and tracks real data points from the private sector. So this isn't manipulated in any way, shape, or form. And it's this blue line here, it's called trueflation. And what happens is that the federal data, the labor data, lags the inflation rate that trueflation puts out by about 45 days. So when we peaked, according to the trueflation guys here in blue, in 2022, the government's own data peaked about 45 days later. And you can see that again and again and again and again with all the little circles that are on this chart here. And if you look at the data right now live, the website called Trueflation, inflation is 1.35% in the US. And maybe you're saying, oh, that doesn't feel like that, everything is expensive. Yeah, because it hasn't gotten cheaper. Like you've had like horrendous inflation, right? You really had horrendous inflation in 2022, like 11% and so on. And it hasn't gotten cheaper, but the pace at which prices are going up has slowed down a lot. And it's slowed down to a point where the Fed should be cutting interest rates, quite frankly. But they've got their head so far up their own data that they're not yet. They will eventually. They're always too late, right? Now, that creates the mother of all opportunities. Because if inflation is truly lower, then growth stocks will rebound because the Fed will cut rates. And let me just explain that to you, because I want to make sure that that really, really lands with you. Lower inflation means what? Well, it's a sign, it usually leads to, or it's related to less, basically, economic activity. Like, there are not that many jobs available, so you're not going to negotiate for a raise that high, that hard, right? So what happens then? What's the way to fix that? Well, what then typically happens is that the Fed comes and the Fed lowers interest rates. Why do they do that? Well, it essentially makes money cheaper. Right? If you're borrowing money, it makes money cheaper. And if money is cheaper, what do we see more of? We see more spending, right? Because you're going to flex that credit card a bit harder, you're going to get a bigger car loan or whatever. But you also see companies invest more because it's cheaper to borrow money to build that factory or, buy the equipment or buy the machine. And that spending and that investing, what does it do? Well, it does one very, very beautiful thing, and that is that it connects up here to economic activity and it makes it go up. So low inflation is the key for the Fed to cut interest rates. Once it does that, the economy booms. What happens when the economy booms? So what's the side effect of this here? Well, for us stock investors, what do we care about? We care about stock prices, right? So why would stock prices go up when interest rates go down? Well, it's two ways. One, there is more spending, there is more investing. Actually, three ways, sorry. And then there is a third one, which is valuations go up. So the multiple that we have on stock prices go up. So generally speaking, a 1% lower interest rate leads to about a 9% higher stock price for your riskier stocks, so your kind of growth stocks, the sort of archetype portfolio thing. That's usually the playbook. Does that make some sense? If that makes some sense to you, just write the word sense in the chat, and I know that you're alive and well. Even an S would do the trick, and I'll still know that this sort of made some sense for you. Okay, Jonathan there, appreciate the sense. Just me, only had time for an S. I still appreciate it. George, my friend, Barbara, S, and sense, and John, sense, and Sophia, S, and okay, a lot of the sense rolling in here, Mark, I like that. Okay, that's a lot. Yeah, it's kind of a lot of stuff. I know we're trying to cram in a lot of information here, but I think it's important to understand what's going on here. So what's good news item number 3? Well, I talk about this a lot, right? I talk about the VIX a lot, and people look at me and they go, what's wrong with this guy? Why does he keep talking about that? Nobody knows what that is. It's the volatility index. It's the fear index. That's really what it is, fear. Now, we're kind of close to the 30 mark here on fear, which is sort of often the top of it. Doesn't have to. We can obviously go higher. So when there's a lot of fear, and loving all the S's in here, all the senses in here, thank you. What happens? Well, historically, investing in the S&P 500 by an ETF like SPY or VU or something, when the VIX is above 30, around 30, the average return for the next 2 years is 27%, which is significantly higher than the usual returns. So what that's basically saying is buy when everybody is fearful. Buy when everybody is fearful. But don't go out and buy individual stocks when everybody's fearful, because that could go down a lot. The index will not go down as much, and the index will in the long run always go up. Your stock darling may not. Your stock darling may go bankrupt. It's possible, right? So the index cannot go bankrupt. It's impossible. Think about it. There's 500 companies in there, and say one of them goes bankrupt, right? So one goes kaput. Right, what happens? Well, now you've got 499 companies, and one new company gets added to it, and then we have 500 stocks again. So your index just gets changed up a little bit in terms of what's on the inside, and therefore you're never actually going to go bankrupt. But if you just invest in that one stock and that goes bankrupt, well, then now you're in trouble. Or if it's the one sector that everybody now hates, right? So that's important. Now, let me give you a strategy, because I think so many people out there just give you all the wishy-washy and buy the dip, buy the dip, buy the dip, and all that, but it doesn't feel good. It feels hard, right? So I'm not saying you have to do this. I'm not saying you should do this today. But say you have some cash, right? So say you had $10,000, obviously works with any other sum as well. Rather than just throwing it all at one stock or all at the market today, nobody knows whether the market is going to go lower at this point. Like nobody. Like people tell you that, they're just plain lying. And yes, there are the people who always predict every crash, but they've probably predicted 386 crashes in the last 5 years, and then the 3 times where we actually crashed, they were also right. What I would do, and I'm not telling you to do that, but this is what I would do. I would put $3,000 into the S&P via an ETF, like SPY or one of those. If we go down another 5%, you put in the next $3,000. And if you then dip another 5% after that, you put in the remaining money. So what have you done? Well, you've taken a stock market that does that, and you've bought a little bit here, you bought a little bit here, you bought a little bit there. Eventually, it'll go back up. The S&P always will. And what's the difference? Well, honestly, in the long run, whether you buy here or there, doesn't make a huge difference. But psychologically, it feels really bad if you put all your money in here, and I'm worried that you're going to get to here and that you're going to sell, you're going to bottle out. Whereas at least this way, you're thinking, well, the market's fallen, I'm going to get it, my stock's cheaper. So we're trying to game our psychology a little bit by looking at it that way. And this is also why I'm a huge fan of just investing at least on the first of every month. Ideally, even every week, which is what I do, because that way you always look at the market and you go, well, it's going down, and it's brilliant. I'm going to get more stocks this week than last week because the market's down, or more stocks this month than last month because the market's down, right? So that's how I look at it. I'm like, brilliant. I'm getting more shares. Amazing. In the long run, it's going to make me more wealthy, right? But that only works if you really have that mindset of just buying every month, and this works really only with the index. This doesn't really work for individual stocks, right? So if you want to do something more safe, buy the index, spread it out, and that way psychologically you're not going to bottle out. But this only works if you don't need to access the money anytime soon, right? Because what if you put the 10K in and the market drops 30% more, and then you need the money? Well, you don't have access to the 10K at that point, right? So that's really, really important to understand. Curious says, which index? You could split it between the S&P and the NASDAQ if you wanted to, right? Or you could just do the S&P. That really is no right or wrong rule on that. But if you want to potentially do better than that and actually not be the bag holder and not just follow the index, because the index makes, on average, it's made 12% for the last 10 years, which is pretty good. 10 years, if I could spell 10 years. Could you do better with being a bit more active? Well, if you, in theory, and I'm not saying that you will, but I'm just saying, I think it's very possible. I certainly do. And I think everybody with sufficient education and guidance can too. And how do we do that? Well, we have to have reasons for when we buy. We have to manage the process, and then we have to sell higher than when we buy. That's pretty much it. It sounds pretty simple, but it's actually a little bit more complicated, and you know that because you've tried it, right? So there are basically 3 steps to that get us to that nirvana where we make smarter decisions, and we do them based on rules and no longer on emotions, and we no longer think about, is this too expensive or too low, or is this the PE or any of that nonsense. We just look at some really firm, hard rules that I've alluded to earlier in the video, but you can get access to those very firm, hard rules that took me like 10 years to learn from some of the most successful guys on Wall Street by going to felixprehn.com/getfree. It's a 15-minute masterclass that gives you literally those rules. And it isn't just about buying, by the way. Like, selling is actually where we make money, right? Just think that through, right? Where do you make money? When you sell. So we focus very, very heavily on that side. So check that out. Now, do you want to have a look at the pre-market, or should we rather end it here and then show you a kitten or something? Because that might be better. Well, volatility is up slightly. This is the pre-market heat map, which is not as horrific as yesterday, right? Tesla is actually somewhat in the green. Trump is buying a Tesla today. He tweeted that to support Elon. Because that guy I think he's getting pretty unfairly hit. I don't really know why he bothers, to be honest with you. He doesn't seem to be getting much out of this. What else is up? Now is up. Philip Morris, Coca-Cola. But most things are flat, right? Amazon, Meta, Google, Microsoft are flat. Apple down some more, which is not a good thing. Nvidia is basically at 0. AVGO is up a little bit here. And the market is indeed open, and it's been open for 5 minutes, so you're quite right. So we can actually look at the live market. Thank you very much for pointing that out, my friend. Who was that? MVP. This is what it looks like right now. It's a little bit of an improvement, right? So let's have a look at some of our favorite tech stocks here and see what they're up to. I'm starting here with Palantir for no particular order reason, up 1.2%. That's a little bit better. What about Nvidia? Nvidia is up also 1.2%, which is pretty good. Christopher says Civic Duty. Yeah, I think you might well be right there. But again, it's a. I think people are being very, very harsh on him. Honestly, I don't really understand the hatred. for somebody who's trying to cut waste. But I guess it's just the system kicking back, right? They've been rather happy with that waste. So yeah, Nvidia popping up a little bit here. I'm a little concerned about Apple falling another %. Where Apple goes, the market goes, was always the old sort of saying. How's that looking in terms of, it's below all moving average lines, so not pretty. The last time we were there was when? Beginning of 2024, right? We fell from 190 to 160, and then had the mother of all rallies that nobody really understood. Is the market open 1 hour earlier? It was a good question. Some muppet decided to change the clocks in New York, I think. It started with a salute that was misread, I think. I don't think it was misread. I think it's very, very intentionally misread. Have you seen that? Like politicians, that Hitler salute. Look at some of the pictures out there. This is the picture, right, that they're accused him of. But yeah, let me see if we find one of these pictures. This one is a collage, right? There is Obama, there is AOC, there is Hillary. You'll find these, the Pope. You find these literally on every single politician because it is from a certain angle. It just looks like that, but that's obviously not the intention. So I don't think anybody thinks that Obama was a racist or is a racist, right? That kind of seems crazy. So yeah, it's just one of those things that's just, it's intentional. Someone's intentionally trying to like wind people up. Now, okay, so let's look at some of the other favorite tech stocks here. Tesla is up now 3% here. Okay, that's something, isn't it? What about PayPal? PayPal is up 0.3%. Microsoft was also bleeding pretty hard yesterday, up ever so slightly. What else have we got? We've got SoFi. A lot of you guys are invested in. 1.2% up, so better than a kick in the groin. Anything else? Feel free to shout them out in the chat, my friends, and we'll look at them. Obama didn't support the AFD. I don't think supporting the AFD makes you into a Nazi either. It's just people just have these extreme views that everybody who's slightly to the right of their own opinion is therefore somebody who wants to commit, mass murder and kill 10 million plus people. Right? That's a Nazi. It's a pretty extreme thing to accuse somebody of. Like, do you want to kill an entire people? I don't think that's true for Elon or most people that I get accused of being, Nazis. So yeah, there we go. Hood needs to do some hooding. 1.4% up. So not a big move after a day down like yesterday. Archer, ACHR, 1.1% up. Not quite what you were hoping for, I think, but. Not exactly brilliant. Where was the breakout? Breakout was down here. So we're basically at the breakout level again. And really what you want to get to is where you either exit up here or where you exit up here. And that way you actually get to lock in profits and not just hopefulness of future profits. And that's really what I want to spread to more and more people. And I know it's not easy. I totally get that. I also sometimes think, but I really want to hold on to this company. It's so amazing. But the smart thing is always to follow the rules. And that's how we realize profits. That way we have real money, like the good stuff we can actually spend. So if you're going to come and learn that, there's only one place to learn that, and that's the masterclass that I've recorded especially for you at felixprehn.org/get-free to get you free from your wage slavery and your bag holding. Now, what else have we got here? ASML, got some Brits living in Germany. Why are you doing that, my friend? I was a German living in the UK for quite a while. I think I was there about 9 years or something. Nice place. But London seems a bit on the rough end at the moment. Here's ASML, up 1.4%, but not exactly like, something you get super excited about at this level, right? We're just slightly above the previous levels there. Where's our support right now? Support's at 700, so we're still below that. Adam, you feel like that with ACHR? Yeah, that's why I said stops, which is what knocked me out of ACHR. And I was like, oh, that's annoying. It kicked me out. I wanted to stay in this longer because I know it's in a brilliant company, but it's just important to do that. Really. Is Rheinmetall worth a look? Yeah, all of the defense contractors in Europe are doing a very, very good job at warmongering and war profiteering. And yeah, it's a very profitable industry. So yeah, they've done incredibly well, Rheinmetall especially. It's kind of, isn't it really weird? You're basically saying to the Germans, and I'm German if you hadn't realized, that we want you to really arm up. I mean, we want you to really, really spend $400 billion on defense. We want you to be at the cutting edge of military. We want you to be armed to the teeth. And then we want you to march through Poland and support the Ukraine and fight the Russians. Is that really what we're saying to the Germans? And I mean that with a bit of a sense of humor, of course, for some of you who don't have that, fellow Germans out there. But, you know, it is a weird thing to ask of Germany, I think. Very, very odd. Now, okay, you're in Germany. I think Germany is also going down the toilet, isn't it, in terms of crime? What part of Germany did you live in? I was born in Hamburg. I lived there till I was 15 and went to the UK. David there, he says, Felix, thank you so much for helping so many people that you don't even know. Your videos are very, very helpful. I appreciate that, David. That's really the intention. And sometimes it's also just, I think, almost emotional support. Like I sometimes think, you know, this is more like therapy. Because in moments like these, you know, when you're alone and you're kind of like freaking out about everything, I think it's good to put things into perspective. And ultimately, my goal is just to encourage you to get yourself the financial education you should have had when you were like much younger, because governments should give it to you, but they won't. So you have to take it into your own hands. What's the bull case for AMD? There's no hate, my friend. There is no emotions in stocks. That's really an important thing to realize. Just from a chart point of view, AMD is looking pretty miserable. It just keeps falling and falling and falling, and things that are falling and falling and falling typically keep falling. That's just not something I made up. It's just something that people discovered in the 70s. And by people, I mean traders who are making a lot of money, which is why I wouldn't touch this with a barge pole. Cheap is a relative term, right? Like, you know, it's trading at $55 in 2022. It's entirely possible it could revisit that. In fact, it could go lower. Now, do they have a good product? Do they have a good CEO? Yeah. But that does not translate into rising stock prices in the short term. So very important to learn what a falling knife is. And this is a textbook case. And then actually learn where you want to be buying. And put all that information for you into the masterclass. If you want to watch that, felixprehn.com/get free. And it'll mean you are not in stocks like this anymore, right? Jakub, my friend there, you're in Hamburg, okay. Hello. More Russian propaganda, says Alan. Apparently I'm a Russian agent and a racist and fascist at the same time, which is interesting. Alias, you shorted AMD. Yeah, it's an interesting one to do. The only thing is there, like, you got to look at the sector, right? And how's the sector faring? You don't want to go against the trend. So yeah, I think you've made a good call there. I don't know when you got in on this, but sort of since mid 24th or so of Feb, I think that's been a reasonable one. Just want to watch out for the sector rebounding, because that's going to drag everything up, and then, you know, that's going to be painful. Microsoft, says Reese there. We can definitely look at that one. And that's up 0.3%, which isn't really like, you know, it's not really changing things right here, is it? What was the other one you put in there? You put Amex in there. AMX. What's the ticker for AXP, isn't it? Yeah, AXP. That's down another 1.3%. That's probably recession concerns. You know, is the consumer really going to get hit? That's probably what that is. So that whole sector, I think, will not look pretty. So what can you see here? You see that we're falling, and you can see that volume is picking up, which is pretty ugly, pretty ugly. And how do you avoid things like that? Well, TradeVision told you to sell up here at 310. doesn't tell you to. Obviously, it gave you an indicator that it might be something you want to consider. Smart move in hindsight, wasn't it? So get yourself a free trial to TradeVision, because it's got some pretty insane indicators that we built in there, and yeah, some really cool stuff coming out in the next couple of days as well. I must be very clever to have some ideologies. I think probably just schizophrenic. I'm a schizophrenic Russian agent who's apparently also far right. What do you think of Macy's? I don't know. Retail, really? I always think, is that the future? You know, it's sort of like, we've got AI, we've got robotics, we've got, you know, biotech, and we've got department stores with people in it who could be buying the stuff online. That's kind of my long-term view on Macy's, but from a chart point of view, it's pretty hideous because we're below all the moving average lines. Everything is falling. So I would be very, very, very cautious with that. Mark, appreciate you liking TV there, which is, of course, TradeVision. And Mandy, you can request features in, if you click on the blue little button there in the top right in TradeVision, then you can actually, there's a feedback thing up there. We're going to move that somewhere. You can more easily get to it. But yeah, there's a feedback thing here, and you can literally just put in there, post an idea that you want us to build, and then you can also vote on the ideas that people have put out there, and we'll build those things. And you can see also what we're building presently, which is 99% what you guys are asking for. So just, yeah, do that, and that way it actually gets taken seriously. Lovely sense of humor for an agent. Yes, you're a nice chap for a Russian agent. What would jobs data actually indicate? Well, yeah, jobs data is going to be an interesting one coming up, because if we get a lot of job openings today, then that would indicate inflation concerns, the Fed isn't going to cut rates. If we get very few job openings, very few, people are going to scream recession fears. So you kind of want to be just in line with estimates at the moment. You kind of want to be like boring. That's really the only good news, I think. And then tomorrow we get inflation data out as well. And then Thursday, more jobs data. And then Friday, the comedy of the week, the Michigan Consumer Sentiment Index. JKS, thanks very much. Watching you use TV helps to learn, Thomas. Brilliant. I was actually going to plan on making a little mini video series on that for probably next week or so, on how to use TradeVision better, because I appreciate not everybody, doesn't come naturally to everybody, does it? What's the expectation for jobs today? You can see that here in TradeVision. We are expecting, what's the number on that? 7.63. What's the unit? It's that 7.6 job openings. That's probably 76,000 stuff. That is. I don't know. Albert, any thoughts? I'm joined by my intern, who's been a naughty boy apparently. So we adopted 2 kittens a little while ago. 1 female, 1 male. You see where this is going, right? This is the boy. And we thought about desexing them, neutering them, spaying them, whatever you call it. And I don't like to do it too early because they're little and it's good to have the hormones and so on. So we didn't do it that early. And then the girl went on heat, which is a fairly noisy affair. And we're like, oh, we're going to separate them. It'll be fine, right? She appears to be with kittens. So this little monster is responsible for that here. This was Albert. Albert, the troublemaker. Any word on your defense, Albert? He's like, no? Oh, there we go. So yes, we might be having a few more kittens around here soon. See how many they pop out. So there we are. Now, a TV series would be fantastic. Brilliant, Brent. Yeah, that's one of our plans. Congrats. It wasn't the intention. It wasn't planned. We thought we'd adopted 2 kittens. Now we seem to be having an entire family. It'll be very cute, obviously. It'll be super sweet. So 7.6 million. Is that what that is? Okay, brilliant. Monica, you think it's cute? It will be very sweet, yes. My housekeepers are very excited for it too. So it's going to be an interesting one. Never had a cat that was pregnant with kittens, so we'll see. Now, do you have an opinion to Leonardo? I don't know what that is, my friend, so I don't know. Will you ever have LSE stocks on TV? You mean British stocks? You mean stocks that make people poor? Have a look at the performance of the S&P for the last 10 years or something, and compare it against the Brits. Pretty dire stuff. No, but it's not something we're against. Obviously, we have quite a lot of British users on TradeVision. So again, the more English people sign up for it, the more we cater for you guys. Same with you Europeans. So I'm not against it. It just has to make sense from a data point of view, because data is insanely expensive. The kind of data that we get. Rare cat breed. Yeah, it'll be a rare street cat breed. Just what the world needs, more kittens. I know, it really wasn't intentional. That was not my intention at all. That's why we adopt, and that's why I always get them neutered and stuff, but we'll have more kittens. We'll look after them. So, yes. And funnily enough, I saw the same thing happening out of my window. I saw 2 actual cats who live in the forest, up to the same thing. So, now, short squeeze mentioned here. I think it's a little early for that, but in theory, yes, because the market is insanely short. We're more short than we've been in a very, very long time. So if there was to be a good piece of news that would squeeze us higher, that could have a tremendous impact. I had a chart here somewhere, didn't I? Not it? No, I don't know where it's gone. This was the chart from a few days ago. It's actually a bit more extreme, just people buying puts, which is sort of shorting. So yes, it's possible, but you need some real turnaround news. And at the moment, we have a lot of news that I just explained to you if you've just joined us. Start from the top, but we haven't got quite that sort of news yet. So what can you do? You can get smarter. You can get better educated. You can actually learn the rules that the people who worked on Wall Street for decades are using and have been using for decades, and that you aren't using because you aren't aware of them. Why not? Because nobody teaches them to you. Why? Because they like to keep it to themselves. Very simple. So I'm the Wall Street snitch who shares it with people, and tens of thousands of you watched it so far, which makes me super, super happy. If you go to felixprehn.org/get free, you get access to that rule book, the masterclass. It'll make you into a way smarter investor, and you're going to look at everything you're doing right now in a very, very different lens by the end of that 15 minutes. I can promise you that. Stephanie, you've been beyond loaded with kittens there. Thankfully here, the charities have been very good, and we have actually been supporting them for a long time here. They've taken most of the street cats off the street and desexed them, which is the right thing to do, and it's really, really, really reduced the population of street cats, which is a good thing. There obviously are still some, but a heck of a lot less. So I like Albert's eyebrows. Shane, VIX to the downside. You want to be very, very careful with that. VIX could go to 100. So you have to make sure you're prepared for that. So if you ever do consider shorting VIX, make sure you understand your gammas and your deltas and your vannas and all that kind of options talk. If you don't, stay away from it. You can just buy the stock market. If you do go with that, I would also make sure that you have limited downside, because you can blow up your portfolio with that kind of move if you don't know what you're doing. So Jochen, VIX is something. It is something very interesting, but it is a little bit of a learning curve there. There is definitely quite a bit to that, and I have the tremendous privilege. I have a WhatsApp group with 4 retired market makers. So these are guys who were basically making the options market for like decades. So when I do a VIX trade, I share it with them, and I say, "Hey guys, what do you think?" And then all 4 of them start writing frantically and telling me strange things about volatility, which of course is super, super useful, and it makes me into a better trader. And that's how I learn. You can access the same guys, by the way. So all of you guys who are in the community, you already have access to them, because my mentors are your mentors. So start learning. That's really what I'd say. It's the most important, the most gratifying, and the most powerful thing you can do to improve your life, is to learn how to manage your money well. How many hours a day do you spend earning money, right? 8 hours at least. You drive there and back, so now it's probably 10. And this is a job that doesn't have very long hours. Do you think about it when you come home? Do you think about it on the weekend? You probably do, right? So this is in reality probably a 60, 70, 80, maybe 100-hour job what you're doing. And then you take the money and then you just sort of, all of us, I'm not having a go at you, but we don't spend enough time on the money. Managing your money properly doesn't take a lot of time. I think it takes maybe an hour a week, maybe 2 hours a week. To learn it takes a little bit more. Half an hour a day would be tremendous. And you would be in a very, very different place in just a couple of weeks. So you want to make a good start to that. Watch the masterclass where I've summarized everything that I've learned in the last 13 years as a former banker and now trader managing my own money. It's at felixprehn.org/get-free. The link is down below. I'll pop it on the screen for you as well. There it is, felixprehn.org/get-free. And I love you for tuning in. Jochen there, my friend. That sounds brilliant. I appreciate you. Ariel, thanks very much. Thanks for all the kind comments. You should teach more about the VIX. Yeah, there's some danger with that, though, is that you have to realize there's some things that are quite complicated. You kind of gotta go through the steps. You can't jump from zero to hero. You can make massive gains with low risk. VIX is a high risk instrument that you need to really understand. So I don't think I'm going to be making a YouTube video on it because I think some people are going to lose their shirt. And I want to teach you stuff responsibly. Not holding anything back, but also just being careful of, everybody has a different level. If you want to really learn that, you got to get yourself a mentor who's traded options for a couple of decades. That's really the only way to learn it. Thanks very much, guys. I wish you a beautiful day, and